I guess it was a good year for Bitcoin. It's still up a lot from its lows. But setting aside 2019, what do you think is the key thing that you're most excited or looking forward to in 2020?
So for 2020, I'd say the main thing that I'm excited about is to see this kind of vertical construction era play out. So over the past few years, we've really had something that's dominated by what I'd call the ICO and horizontal competition era, which was, hey, people finally acknowledging that these open, public, permissionless blockchains are really the real driver of innovation here. It's not these private enterprise blockchains that people toyed with from kind of 2014 to 2016. And so
blockchain, not Bitcoin, is officially dead.
That one was officially dead, and then people said, okay, I recognize the power of these open, public, permissionless networks, and they started to launch new ones. They said, hey, okay, if Bitcoin was the 1.0, let's go ahead and launch 3.0 and 4.0 eras. Now, a lot of those blockchains have started to hit the market, and they're not attracting a lot of developer attention. So I think investor and developer momentum has really shifted back towards, hey, let's build on the things that are working. So let's go build on top of Bitcoin. Let's go build on top of Ethereum. And I think as people build up the stack of those protocols, we're going to see more and more useful applications and services that are built on top of them. And that's what I'm excited about looking forward.
Okay, so does an example of that vertical construction, does that include something like Libra, which so far hasn't really gotten off the ground? It hasn't even gotten past the hearings on Capitol Hill.
So, it remains to be seen exactly what form Libra will take when it launches, but I'd qualify that more in the horizontal competition era. Now, if there's anybody that's going to go and compete horizontally versus the chains that already exist, it's somebody like Facebook. So we'll see. Jury's still out on that one, but I would not say it falls in kind of the vertical construction camp.
Spencer, key question. In May of 2020, the block reward for miners is going to get cut in half. And some people think that the diminished pace of new Bitcoin issuance mintage is going to lead to a big surge in price. And others say it's priced in because everybody's known it since the day that Bitcoin was created. Which side are you on?
I guess I'm somewhere in between. Look, it's absolutely priced in the truest sense of there are no risk-free returns to be had here. So in that sense, 100% priced in. Will price rise around the time of the halving? That's a little bit of a more nuanced question. So I think there's two kind of really important factors to consider here. One is that the halving kind of represents this Schelling point, right? A natural point of convergence for capital that's on the sidelines and is interested in an allocation towards Bitcoin. So, there is a significant sum of capital that's in that kind of position today. And a couple data points there are, we run a survey about every 18 months, surveys more than 2,000 American adults. One of the things that we ask is, kind of questioning their conviction in the future of Bitcoin. So we ask them, to what extent do you agree or disagree with the statement that most people, so more than 50%, will be using Bitcoin within the next 10 years? And what we see is that, in spring of 2019, when we asked this, 33% of people and 48% of those aged 18 to 34 said that they strongly or somewhat agree with that statement. So there's a lot of conviction there. And then we also asked them about their propensity to purchase. So how likely are you to buy Bitcoin in the next 5 years? And I think 27% of all respondents and 33% of those aged 18 to 34 said they are very or somewhat likely to buy in the next 5 years. The point being that there's capital on the sidelines, people are relatively indifferent of, do I purchase today or tomorrow? But all of a sudden when people start talking about the halving and this reduction in new issuance rate, it drives more purchasing. And also this, really importantly, this reflexive kind of feedback loop that really drives the Bitcoin market, where rising price drives more infrastructure, more on-ramps, more computing power securing the network, better liquidity, all of which kind of feeds into a rising price.